Meantime, the private credit industry swelling to $1.6 trillion in 2023 as more companies turn to private markets to access funding. Still, our next guest says small and medium companies are largely missing from this equation. Damien Dwin is the founder and CEO of Lafayette Square. The firm lends to middle market businesses. Damien, welcome to the show. Great to have you with us.
Thank you.
This is a great business to be in right now. You're walking me through the economics, and you're lending, what, at 13%?
That's what we reported in our 10Q last week.
Yeah.
It's interesting because of the Fed moving so far so fast, because of inflation and where we are with liquidity in the capital markets, you can get 500, 600, 700 spreads on good companies right now. But I would be cautious. You know, there's no free money, and what matters is the return per unit of risk. So where are we on leverage, coverage, loan to value? Where are we on the actual quality of the underwriting and due diligence? Where are we on the concentration and crowding effect that we're seeing, particularly for the bigger borrowers who are relying on the same handful of firms to lend them money? I worry about the correlation. So I like betting on working class people. I like betting on all 50 states. The data shows today, and this is jarring, half of private credit goes to just 5 states.
Really?
Correct. So if you're not in California, Texas, Florida, New York, Illinois, are you getting your fair share of access to private credit? Is your cost of capital reflective of the quality of your business, its earnings, its debt capacity? Or is this really a conversation about being in the right place and having, access to the in crowd?
The small to medium-sized businesses, though, do you feel like they're I mean, it seems like they would be riskier inherently in this kind of environment, paying 13% on a loan.
So that is the stereotype. The data tells you something else. So first things first, the addressable market we're talking about is 240,000 companies with revenue of $10 million to $1 billion. So that's a lot of companies. But guess what? There are 30 million companies with less than $10 million in revenue. And when you look at the audited financials of these companies, they don't have access to the banks because regional banks obviously are not at the table. And the private credit lenders are focused on the largest of the lot. So I'm talking 300 million EBITDA as the cutoff for where a lot of the big private credit firms want to lend today. So it's a tale of, sort of two markets. And 50+ million Americans are employed by these small, medium-sized businesses controlled by families that are doing the right thing, and they tend to be conservatively levered. They have a lot more equity than debt.
Damien, that's where I was going to go. When you think about small, medium businesses, they're huge employers here in the U.S. You just mentioned 50 million here. So if some of these, companies that don't have access to the private credit markets, I mean, what does that mean for unemployment? We're starting to see it tick back up towards 4%. Are you getting any data out of some of the just kind of the trends that you're seeing in the lending markets right now?
Working class people are not getting the opportunities they need. You have, on the one hand, record low unemployment. On the other hand, you recognize working class people are living check to check, and their social mobility is flat to down. So this is a very scary situation. The employee benefits being delivered by all of these companies do not meet the moment. All the data tells us, particularly working class people, are under-enrolled in company-offered retirement benefits and healthcare benefits. And so if you pause as a business owner and stratify the wages of your employee base from the highest paid to the lowest, you just have a cutoff at that 80th percentile, you recognize right away your bottom 80th percent aren't even enrolled in the company benefits to the degree that your top 20 are. How do we fix that? Then you got to deal with wages. And in this environment, it feels like the 70s to me. What people are being paid is not enough. We're seeing it in credit card data, auto loan data. We're seeing it in home equity loans. This is a very fraught, scary time for working class people. And I think the government and the capital markets need to get on the same page. Today, they're not on the same page.